Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So as we're pushing all-time highs, it's a great time to stress test the network. But anyway, I don't like it, but who cares? It's Bitcoin. If you don't like it, it's Bitcoin. What can I say? People can do whatever they want. If they want to spend 6 BTC with 11,000 transactions, they're going to do it. Yeah. Let's see what happens. We're going to have some unconfirmed transactions probably. I think it's around 50K right now. I haven't checked, but it was between 50 and 80K for the unconfirmed transactions. So that's fun. We did have a inverted head and shoulders that played out. It was kind of iffy. I liked how it was at the resistance of the Pitchfork, this mini Pitchfork. Whenever I don't put volume on an inverted head and shoulders, it's because it doesn't fit my narrative. So no, the volume did not look like a inverted head and shoulders volume, but I posted it anyway. I put bids at 1220 on one broker. Didn't get hit, unfortunately, with those bids, but the inverted head and shoulders did play out. And some clues to that playing out were the TK crosses here. Even though it recrossed bullish, it's a 30 minute. 30 minutes pretty noisy. That's my story, and I'm sticking to it. Wrote an article in Bitcoin Magazine about gold parity and how it really doesn't matter, even though it's a big deal in the media. And I wrote an article in Brave New Coin. I'm going to talk about some of the stuff in Brave New Coin, but give it a look. Pretty interesting. So, turn as your friend until the end, and right now the overarching lens and principle of this market is bull, baby, bull. The video is going to be pretty not exciting because there's really not much to talk about other than we're just pushing highs and there's no end in sight, which is good. I mean, I would like to be bored and in or out of a position without thinking too hard. So one key to that, the trend not being over anytime soon, is this Pitchfork from 2015. As usual, I'll link all this stuff in the description, but you can see we're definitely in overbought territory, so I don't expect us to stay here forever. We generally don't stay in the blue zones forever. We did here for a little while, but you can expect sort of a poking out and then a crash down. You can't expect parabolic, even though it feels like parabolic is coming. You can't expect it. It feels like the ETF is going to get approved, but it's almost certainly not going to get approved. So when it doesn't get approved, what will price do? It may pull back to the median line of here, which is around 1K to 1100, which is still amazing to think about an intangible object being worth that much money. It's still insane that we're sitting at all-time high levels. So this is a Pitchfork. It's been good since 2015. You can't expect it to not be good all of a sudden. Certainly if we start closing below the Pitchfork for any reason, then you can start saying that this is invalidated. But until then, the Pitchfork rules the game, even more so than Cloud, dare I say it. Just talk about Pitchfork some more. Here's a small Pitchfork. So it's a mini Pitchfork within that big Pitchfork, and then an even minier Pitchfork highlighting this trend here. You can see we sort of bounced around these zones quite nicely, which to me says the fork is real. So again, if we start closing out of this Pitchfork, that invalidates it, and expect the bigger Pitchfork to take over. But you can see we're kind of in the middle of the bigger fork as far as the resistance and support zones are concerned, and you can always expect a touch of the median line over a break of the upper or lower zones, just because that's the return to mean line. And also the overarching chart pattern of the current trend is definitely this cup and handle, which hit the first target, which is always the 1618 zone, quite nicely, pulled back from there. The measured move's about 1400, give or take, depending on how you want to measure this. So again, we hit the first zone, the second zone's $200 higher. We'll see, but you gotta be happy with what you got so far on the pattern anyway. Now to the cloud. So there's always a lot of little stuff I don't mention about the cloud, just because it's kind of boring to me. So a few of those things, the slope of the cloud, you want the slope to be not steep, but certainly visible and apparent. You don't want the cloud to be thick like this. This whole Ichimoku cloud system is based on equilibrium. Everything always wants to be in equilibrium, and when the cloud is super fat like this, that says reversal. When TK lines are super fat like this, that says reversal. When there's no slope to any of the lines, that says sideways, and reversal is a higher probability than continuation. So right now we're certainly in higher probabilities of continuation than sideways or reversal. But saying that, these TK lines are still decently spread apart, it's nothing like it was in the bear market here, which says that all of this happened really fast on the weekly for these settings. And then later on it developed this as the bottom happened. So, you know, when I'm looking for a top, I'm looking for the exact same thing I saw here, up here, which again, not even close to happening. If something crazy happens like a hard fork, then we can expect with a reasonable certainty that we're going to sort of explore this bull area above the cloud, and this would definitely be the do or die moment at 470 should that happen. And I know that's $900 away at this point, but it's on the chart. It's a support level. I'm not saying it's going to happen, but it's painted between now and 2018, August 2017-ish. Going to the daily, again, I'm just drawing support levels in here. The Kijun is always a level just like the median line of the Pitchfork that price wants to get back to. You can see it happen here, you can see it happen here, you can see it try to happen here, it happened here. So even though we get all these big dumps, aside from this insanity, normally on a technical dump, we pull back to the mean. On like a news-related fundamental dump, who knows where that's going to go. Usually, this stayed bullish, obviously, but there's really no way of telling, for the most part, exactly where it's going to go, because you just don't know where the panic or euphoria is going to set in and turn around. So again, TK cross spread far apart. Currently, it's about 180 bucks apart. It was like 88 bucks apart here. Again, this is like technical boring stuff, but it says we're getting more and more overbought. It's saying we're likely to stay sideways a little bit over continuation and just pushing. And again, certainly we can just go, but if anything, this Pitchfork really is screaming this is due for a pullback just based on the slope of this Pitchfork, which is almost a 45 degrees angle at this point. And again, cloud here is upward sloping. It's not too thick. It's on the thicker side, but it's not too thick. Sort of the Goldilocks cloud thickness, and support 1022 Kijun. So if I leave that on there at 1022 and then I just go down to lower time frames, here's 4 hour. What I'm looking for, again, as always, is an entry signal. Cloud is not telling me that there's any sort of entry signal right now. If anything, there's a bear div. Who knows where divs play out? Question of the day, if you know how to play divs very well, let me know, because I never know where to expect divs to pull back to, if it's just a 50% fib or what. I don't know. I've never really got a good answer on that. So anyway, back to cloud entries. You know, when we get a TK cross, price above cloud is bullish, that's a great entry. Right now is not a great entry as far as the long is concerned based on the cloud. We're getting a bit of a C-clamp again, supports at 1200, 1136, 1073, 1022 is the previous on the daily. Why are all these supports? They're just flat lines and basically saying there are 50% fibs of the move on the way up. This is what you want to see in a bull trend. You want to see just gentle, slow moon, nothing too crazy. Again, it's not super exciting, but surreal because we just keep pushing all-time highs of an intangible object that we all just agree exists. Here's the 2 hour. I kind of like the 2 hour because the signals aren't all over the place, because it's telling me to go long here and then it's telling me to get out here, and there's some questionable re-entry as far as this is concerned. But whenever I see this messy, sloppy noisiness, you just say, you know, when we break the previous high, that's your entry. So your entry would be over here. And again, this is perfect. This is what you want to see in a trend. You want to see the Kijun being tested a couple times. You want to see the cloud tested. The cloud hasn't been tested yet. I expect it to be tested here on the 2 hour anyway. And I'll show you that what that looks like on the 1 hour. But again, just smooth trend. You know, we're getting 1, 2, 3 drives. Sure, this could pull back a little bit farther than 1200, but I don't think it will, just based on technicals. And then the hourly is a little noisier. Go long, close your long, go long, close your long, test cloud. You know, we tested cloud here. Close your long if you're not already stopped out on this nasty wick. Then we get this double bottom in the cloud, which is always amazing as far as an entry signal is concerned. And then go long, and now it's telling me to go out of my long, do not re-long this until you see a recross. And if it's noisy, wait for a new high above, basically above 1300. So your first support here is 1236. Should we close in the cloud, you can expect that to a certain degree of probability based on the edge-to-edge principle. So what I'd love to see is some sort of sideways nonsense in the cloud, kind of like we did here. It doesn't necessarily have to be double bottom, but it can be double bottom. This is almost an atom bottom on the left here, an atom left. We might just see a U here over the next 24 hours or so. That's fine. and then we get a cross-recross, whatever, of TK lines in the cloud. That's your entry signal. That would be a non-noisy entry signal. Kind of like here, how it just, support was definitely holding here, even though it looked noisy on the 2 hour. When you sort of fine-tune the telescope go down to the 1 hour and look on the 4 hour, you can see things like this, which improve confidence and certainty. And here's the 5200 on the 4 hour. If you hate cloud or can't understand it or hate my voice, just look at this chart, and you can see that, again, no signs of reversal or stopping or pullback. If anything, it's not a great place to be short or long just because we're in between yearly pivots. There's definitely, just like the C-clamp TK lines being spread apart, the 5200 is pretty spread apart here, like it was here, so that kind of says we're in overbought situations based on non-oscillator conditions. But just looking at that, it doesn't mean we can't just keep going, but it certainly says be careful up here if you're opening a long. And then lastly, if we go to the live hourly, it looks a bit like a giraffe. Let me just draw this because Hearns always tells me it's not a giraffe, and I don't know what he's talking about. But to me, this looks like a giraffe. Giraffe is just a pattern we've sort of established as a bearish continuation. The inverted giraffe would be bullish continuation. So, it looks like a giraffe. It's just got long legs. That's all I got for today, guys. Hit me up on Twitter, Telegram. Let me know if you liked or disliked this video. Comment below, and happy trading.